Everybody knows that overspending in retirement can be an issue, but also pinching every penny in retirement can be the same issue. If you overspend, the risk is you run out of money. On the other end, what you're maybe missing out is freedom of time, memories, being more with loved ones. And so that fear of not having enough, it's as big of a problem as the person who can't stay within their retirement means.
Welcome to the Freedom Point Podcast, where we talk about time freedom, passive investing through real estate, finance, and mindset. Let's dive in.
Quick disclaimer as always, I am not a CPA, I am not an attorney or a financial advisor. This is not financial advice, not telling you or anyone else what to do. The views and opinions expressed in these podcasts are provided for education and informational purposes only and are not necessarily the views of my employer.
All right, welcome back, Freedom Point Podcast listeners. Thank you again for jumping into yet another episode of the Freedom Point. I'm so glad you're here with us again today. I've got another amazing guest, actually not just an amazing guest, but a friend of mine as well. I've got Mike DiSalvo. Mike, welcome to the show.
Hey, Jeremy, thanks for having me. Great to be here.
Absolutely. Looking forward to chopping it up with you as always. So Mike is the owner and founder of Purpose Path Capital. He's a 17-year industry vet, certified financial professional, and certified coach. Mike, I'm not really doing your bio much justice here. I'd like you to kind of steal, that thunder if you don't mind, but maybe you can get our listening audience, caught up to speed a little bit more on Mike DiSalvo, maybe kind of your journey, your path, what you're focused on today, et cetera.
Gosh, yeah, we'll try and keep this the short story here. So I got into the business in 2009, and I was with a firm in St. Louis for many, many years in there. Along the way, in 2015, I became a CFP professional, a certified financial planner. To me, that was going to totally change how we interacted with clients. It really didn't. Once I got the designation, what I found it did was it tightened up some blind spots. It made me a little bit stronger in some areas. I had less blind spots, but it didn't really change how we interacted with clients. And in 2018, I pursued a coaching certification because the behavioral finance or our relationship with money, whether it's real estate, whether it's stocks and bonds, whatever it might be, that's really the core of how we should be interacting with each other. I took way, way, way more out of that approach, that road of the coaching certification, than I did in the CFP program. In 2021, I just felt called to start my own business. We started Purpose Path Capital. I parted ways as friends with the people I used to work with, and we've been on our journey to grow Purpose Path Capital ever since. It's been a heck of a ride. We're just getting going. We're really starting to scale and take things to the next level.
Yeah, that's great. I appreciate that backstory. I love the name Purpose Path Capital. It just says a lot, in a very short, name. But, I'd like to know a little bit more about kind of, Mike's why, right? What drives you to help others achieve, their financial goals?
The couple answers here. Number one, the top phrase in our business is peace of mind. What we serve is peace of mind. What we sell is peace of mind. Our job is to help people with peace of mind. 9 out of 10 people we sit down with, they have investments. They maybe have a will. They maybe have a trust. They maybe have a life insurance policy. They don't have a plan. They don't know how it all ties together. And they don't have that recipe to give them peace of mind. So that's a big part of why I do what I do. The other one is when you look at the DiSalvo side of my family, I'm a half Italian. My dad is 100%. His parents were both 100%. My dad and his family, they are warriors. My grandpa was part of the greatest generation, lived through the Depression, World War II veteran, and that man buried himself into work when he was stressed. He missed a lot. He missed games for his kids growing up. My dad was a college All-American, a college soccer All-American for Benedictine College. And my grandpa hardly ever saw him play. So it caused my parents to raise us totally differently. But still, my dad was, probably 60 years old, and he had quadruple bypass. He had the same issues my grandpa did: stress, worry, fear. So if we can come in and help people with peace of mind, and I can take my family story and help them, we can change a lot of lives along the way.
I so love this part of the conversation. I just recently got back from a week-long trip completely off the grid with my graduating high school senior. And I told myself, there's a lot of different things that I could have been doing during that week that were quote unquote productive, work wise. But lo and behold, the guide shows up on Monday morning and says, you won't be needing your cell phones on this trip because they won't work where we're going. Right. And so that really gave me, not just the excuse, but obviously the requirement really to be completely off the grid, no phone calls, no text messages, no emails, no work, right? It just really allowed me to have intentional time, with my son. And one of the conversations that came up is Dad, and maybe you've got this question before too. Dad, are you rich? Maybe you've had that question before, from one of your kids. And so my question for you is, what does it mean to truly be rich? In your view, is it just about dollars in the bank, or is there something deeper that people oftentimes overlook?
It's a great question, Jeremy. I think there's always something deeper. And for most of us, the answer is something deeper. It's very easy to quantify if you're financially rich. So sometimes we go to that because you can, in a couple clicks, look at Charles Schwab or Fidelity or your 401k and you can quantify it. But I don't think that's what really drives people. In fact, growing up, my dad had a really unique definition of being rich. Whenever we asked him, he would say that he had a roof over his head, a beautiful wife, three happy, healthy kids, and a dog that wagged his tail every time he came in the house. That's always stuck with me. When I look at the people that have had the most impact on my life, some family, some friends, some strangers that came into my life at different times, a lot of them were retired people. I couldn't tell you if they were successful in their career, if they had a 7, 8, 6-figure net worth. I didn't know anything about them. I couldn't tell you anything about that. So much of our time is spent worrying about money and making it and saving it. And I look at the people that have impacted me the most, and what they were worried about is sharing skills, sharing time, being present. To me, that's what's most important.
That's what it's all about, and that therein lies your purpose, right? So being able to identify, what your purpose is, and being able to have the bandwidth or the time freedom in your life to be able to, pursue, those purposes and that path. So, as I think about a lot of people that I talk to every day, and you get a lot of different responses in terms of where people's, quote unquote, wealth building trajectory is at, or where they feel like they're at currently as it relates to being able to retire by their goal age of 50 or 55 or 75, right? Whatever that number is. What are most people commonly missing as they begin to or continue to prepare for retirement? And what would you see are the biggest gaps in their planning or maybe even in their mindset?
I think a lot of times people look for a silver bullet, Jeremy, and sometimes we're looking at apples and oranges. I was sitting down with a client yesterday and they said, "Do I have enough?" Well, this person was asking if they have enough in 401ks and IRAs. This person has a paid off house, they live a modest lifestyle, and they have a pension which probably has a present value of half a million bucks. So I can't give that person a magic number because their situation looks different than the next one. So I take that back. I can give them a number, but their number is different than the next person's number. So sometimes we try to compare Mike to Jeremy or Jeremy to Mike, and it's more about our individual goals, our individual desires. That's what should drive the outcomes we're looking for.
Yeah, it makes total sense. And I think in some cases, some people have this big goal and then they get to the goal and they just keep pushing past the goal because they feel this sense of urgency to keep trading more time and more time for more money, right? If that makes sense. But at some point, you have to come to grips with the fact that eventually enough is enough. And a lot of people that I know that are in their mid 40s and mid 50s, they don't need to keep working. They don't need to keep grinding. They could literally, just take a step back, not let the, lifestyle creep continue to grow and expand in their own lives, and really instead of focusing on grinding out, 40 to 60 hours per week, maybe they ought to get involved with, something that has purpose to give back to others, if that makes sense. So would love to maybe kind of hear more, a little bit from you, Mike, as it relates to how you maybe coach, or counsel your clients on, getting to this point in their wealth privilege trajectory where maybe now is enough. And, let's instead start focusing more on, living out your last years of your life with purpose.
Yeah, so I think what we're talking about here, Jeremy, is the opposite of overspending. Everybody knows that overspending in retirement can be an issue, but also pinching every penny in retirement can be the same issue. It has different outcomes. It can still be a big problem. If you overspend, the risk is you run out of money. The risk is your kids call me and say, "Why didn't you tell my dad he was going to run out of money?" So there's a lot of risks there that are very easy to see. On the other end, what you're maybe missing out is freedom of time, memories, being more with loved ones. And so that fear of not having enough, that fear of, I don't know what's going to happen tomorrow, it's as big of a problem as the person who can't stay within their retirement means. It really is.
Yeah, that makes total sense, and I appreciate you sharing that with our audience. A lot of the fear that I see out there, is really correlated, not only to, am I making enough money? Do I have enough money to sustain my lifestyle? Do I have enough money in my quote unquote nest egg, to be able to, look to retire someday and sit on a beach and drink Mai Tais? But another fear that I see out there is really as it relates to the types of investments that people are in, specifically, Wall Street being a big component of that. And as we know, the bull takes the stairs and the bear jumps out the window, right? And so when it comes to, Wall Street investing and kind of this correlation or this exposure, to the stock market, how is it that people could maybe look to diversify or maybe hedge, against some of these kind of, upswings and downstrokes, in the markets? What types of strategies might you recommend?
It's a great question. And the one thing I want to touch on first is fear and faith are essentially the same emotion. It's believing in something you can't yet see. So we have the choice to have faith in a situation or have fear in a situation. I do believe it's easier to have faith when we are aligned with what we're doing, when we have done due diligence, we have trusted partners, but it's our choice to have faith. And for most people, they just lack diversification. So people that are in just stocks and bonds, they lack diversification in their portfolio. Now, people that have the opportunity to sit down and connect with somebody like you, I think it makes tons of sense, right? Like stocks and bonds and cash are three asset categories of several. There are many ways to achieve your goals. There's many ways to get the outcomes you want. There's probably risk in every road, but we can do the due diligence to figure out, well, should real estate be 0% of your portfolio? It should be 20 or 30 or more. Most people don't know where to go. Most people don't know how to get access to something like what you offer. And so they just do what they know.
Yeah, that makes total sense. And, I think I know that you regularly talk about this kind of three-legged stool, of retirement income. And I think maybe this is where we're going in the conversation. How has maybe that concept changed over time? And our pension, Social Security, and savings still enough, or are they even really relevant today?
I think it's enough. I think there's more burden to bear on us, Jeremy, for how to set that up. The three-legged stool used to be set up for us. If you look at my grandpa, he's still alive. He's 92. He was an aeronautical engineer for McDonnell Douglas, now Boeing. He has Social Security. He has a very nice pension, which obviously inflation has impacted some of it. It's not, the purchasing power isn't what it was 30 years ago. And then he's got personal savings and investments. He didn't have to work too hard to have that three-legged stool. Well, nowadays, most people retire and they don't have a pension. So it's up to us to go and choose where we want to find more secure income or guaranteed income. It could be real estate on a level like how you handle it. It could be they're doing flips down the road. It could be the CDs, laddering CDs or bonds. So there's a lot of different ways to get that secure income, the biggest miss that we see is people don't have a plan for secure income. They're expecting 70 to 75% of their income to come from stocks and bonds, which means they're totally at the mercy of the bears and the bulls unless they structure it right.
I'm Zach Haptonstall, CEO and co-founder of Rise 48 Equity. Our goal is to help you protect and grow your wealth by investing in these large multifamily apartment buildings. We do all the work as far as sourcing these large apartment buildings from the brokers, doing all of the on-site management with our vertically integrated property management company, doing all the renovations with our vertically integrated construction company. We completely rebrand the exteriors. We will renovate the interiors to our full platinum level scope, which increases the value of the asset to get that profit margin for the investors. If you'd like to learn about how you can partner with us on these exciting opportunities, you can go to our website and set up a call with our team.
I know that you're generally coaching your clients or your investors, really on both types of strategies. When I say both types of strategies, I'm primarily referring to, public equities and private equities or alternatives, right? In my case, it's almost all coaching on, the private side, the alternative side. Why is it that you believe that more financial advisors and financial coaches, and real estate professionals or alternative investors, why don't we collaborate more often? Why do you think maybe that's the case? And what would really happen if that wall kind of fell down?
I would say more times than not, Jeremy, the average Jeremy and Mike look at each other like competitors. Because at the end of the day, we're both trying to help people grow wealth, secure income, live out their goals and dreams. And so it would be easy to say we're doing the same thing and we're competing. In reality, we are complementing each other because we have different strategies to help people in the same pursuit. And there's some clients we have where your strategy might be a bullseye for them, and there's other clients that it would never make sense for them. The key is having that team and having that Rolodex of professionals who can help your clients in ways that you can't.
Yeah, no, and I appreciate you saying that. And I've always kind of viewed, my role in much the same way that you view your role, and that is to do right by, the investor. And so oftentimes I'll have investors that will reach out and say, "Hey, Jeremy, I'm looking to invest in self-storage or assisted living or flex office or retail. Do you have anything available for me to invest into?" And the answer is I don't, right? Because we don't focus on those particular asset classes. But, because I have also assembled that network or that Rolodex, as you referenced before, I know somebody in that space, that you could reach out to and have a conversation with to look into that type of investment. So I appreciate your independent, mindset. And unfortunately, I just feel like, within the financial advisor or coaching, financial coaching community, that oftentimes it's laser focused on investing in Wall Street, and there's really no options, to look at any other financial instruments, outside of that strategy, if it makes sense.
And especially in your world, when you look at somebody who might be in our age range, who makes a lot of money, the whole depreciation piece is a big deal. I can go help people grow their money. I can help people hit their retirement goals. I can help people have tax-free income. I can't help them easily shelter other income from investments they already have in real estate. Partnering with somebody like you can. So the depreciation piece, whether it's through you or other types of real estate, that can be a huge, huge opportunity for high income people.
Yeah, makes sense. I'm going to go personal on you here, if you don't mind. I got a couple of personal questions. One's professional, one's personal, to you. The professional question is, what's really one financial decision that you're personally, very proud of, or one that you learned a lot from?
In 2019, we moved cities, and my wife had a full relocation package. She went to work for a Fortune 500 company, General Mills. When we were selling the house, we had a lot of equity. It was a foreclosure. We bought it for about nothing, sold it for a nice profit. And when we bought our new house, we put 25% down. 25% gets you the best rate. We could have put down 50%. We could have put down 60%. We Put down 25%. We kept the rest of the cash on the sidelines, and we started looking for a piece of recreational farm ground that we could use as a family. And in 2020, right before COVID hit, we bought 100 acres in northeast Missouri. It is income forward, so it has a lot of tillable crop ground, soybeans and corn. We put down 40%. It completely pays for itself from the income coming from the farmer. The return on investment there from an income perspective is about 3.5% yield. At the time, the 10-year treasury was about 1.5%. It's appreciated a ton, but most importantly, it's totally tangible. We've got a four-wheeler. We've got ponds there. We hunt there. We look for mushrooms. We've caught 5-6 pound bass. The memories we've made there, it's unbelievable. So for me, we could have easily put down 50% on our house and had a smaller mortgage. But instead, we were disciplined to know there would be better opportunities. We found not only a really, really great investment, but we found something that our family loves, and we get to spend a lot of quality time there. So I think that will always be my greatest investment, if you ask me, because my wife says no matter what, she said if we own 10, 20, 30 farms someday, she never wants to sell that one.
Yeah, no, that's great. I appreciate you unpacking that. And I've mentioned this to a lot of different people over the years, including talking about it, in a book that I recently published. But, that is related to one of the poorest financial decisions that I ever made, which is exactly opposite of the good financial decision that you made. And, I was very blessed early on in my technology sales career to have the dream home that I still live in today completely paid off by the time I was 24. The interest rate on that loan was sub 3%. Okay. So I chose to, instead, seek being completely debt free because it felt good. But at the end of the day, those dollars could have very easily been deployed, into an investing vehicle that greatly outperformed, the 3.5%, interest rate that I was paying, on a 30-year fixed loan. So appreciate you highlighting that, Mike. My professional question, I think, actually became my personal question. It kind of morphed into one, and that, really, my next question is, and maybe it's just a build off of what you already said, but that is, who's Mike outside of the office? Let's get personal here for a minute. What really fills your cup? And maybe that's the time that you spend with your family out at the farm.
That's a huge piece of it. Gosh, we've got 4 kids. AJ's 10. He's going into 5th grade. Elizabeth is 8. She's going into 3rd grade. Both into theater and sports, and they're athletic and creative. Thomas is the wild man. He's 4, and John is not quite 2 years old. So we've got our hands full. We've got a dog. We've got this farm that's about an hour from our house. Tori and I have been married 12 or 13 years. We're busy. We're busy. We do our best to be involved with church and community and with kids and coaching the kids. We try to give back because we've been given a whole lot. But I think at the end of the day, we're just family people. I'm a grinder. I love to work. It's a lot of fun running Purpose Path Capital. Not every day, but most days it's a lot of fun. And for me, another big part of who I am is this. To me, the biggest failure Purpose Path could be is if it ends with Mike DiSalvo. And so that's what we're trying to build here. Is we're building something that will transcend one family by serving many of families.
Yeah, no, I appreciate that so much. And I personally have appreciated, getting to know you, originally just as kind of an acquaintance and now kind of morphing into, somewhat of a friendship here. So also appreciate the tremendous value that you've brought our listening audience on the podcast today, Mike. What would maybe be 1 or 2 different ways that, our listening audience can connect with you, outside of this podcast to either learn more about what you're up to or, look to partner with you, through Purpose Path Capital?
Thank you for that. We're on Instagram. We're on Facebook, Purpose Path Capital. Our website is purposepathcapital.com. My office number is 636-333-1017. And my email is mike@purposepathcapital.com. It'd be fantastic to connect with anybody that would be interested in connecting.
Yeah, absolutely. And I encourage my listening audience to connect with Mike. He's a great individual. I have a tremendous amount of respect for him. So please do connect with Mike, and we will include those links in the show notes for this episode. Mike, again, appreciate you being on the show with us today.
Great to be here. Thank you, Jeremy.
Yes, sir. And listening audience, thank you again for jumping into yet another episode of The Freedom Point. We look forward to having you join us on the next episode.
Thank you for hanging out with us today and for listening to the Freedom Point podcast. This show is for entertainment purposes only. Nothing said on this show should be considered financial advice. Before making any financial decision, please consult with a professional. This show is copyrighted by the Freedom Point podcast. Written permissions must be granted before syndication or rebroadcasting.